Gold made a bear market low just above 250 in 1999 and then proceeded to create its next bull, which
Hmm.
lasted a dozen years, interrupted by a 2008 correction, but still it was a dozen-year bull trend.
Michael, you've always had a unique way of analyzing momentum in silver and gold price action. And a lot of people are saying that gold isn't going up with inflation. Can you expand on that for our audience?
Well, there's a lot of myths out there that people believe or don't believe, and unfortunately, one that they believe is that there's a correlation between quote commodity inflation, which is the way the Fed likes to define it. They don't want to admit that there's inflation elsewhere, like their stock market bubble they created between 2009 and 2021,
Right.
the inflated bubble by monetary policy, et cetera, and money growth. It went into stocks. Sometimes it goes into commodities. And what we're looking at here, the first set of charts there, top chart is the Bloomberg Commodity Index going back to 1999, price chart, simple as that, monthly closes. And below its monthly closes of gold during the same span of time. And if you look at the two charts, you could hardly see any correlation at all. And
Right.
it's justified. You don't, okay? Gold doubled from its 2015 price low to its 2020 high, while commodities went down during that time. Commodities didn't bottom until October of 2020. We gave a buy signal then. We said commodities would explode, and they did. But during that time, gold was in congestion.
Hmm.
So again, no correlation between what gold was doing or commodities. In fact, if you want to argue, gold led the commodity boom by 2 years. Okay.
Okay.
And the commodities finally woke up and said, hey, there's inflation. Okay. Uh, it was simply a matter of investor preference shifting the money flow out of something they began to doubt, the stock market, and into something that was beat off the page, commodities and commodity related stocks. So the Bloomberg finally woke up. Now, but if you look back historically, the arrows on both charts go back to 1999. Now, why did we start there? Gold made a bear market low just above 250 in 1999 and then proceeded to create its next bull, which
Hmm.
lasted a dozen years, interrupted by a 2008 correction, but still it was a dozen-year bull trend. You went from 250 to 1920. Okay. Look what happened during commodities during that time. Yeah, they had some up, then they had a big down, and by the time gold peaked, commodities were having a bear market rally. So
Right.
the correlation is not good. In fact, right now, the Bloomberg is roughly in the middle of the price range of the last couple decades. Gold is at the top end of the price range. So those who try to say, well, commodity inflation is merely one aspect of what inflation does, meaning monetary expansion has impacts. Sometimes it hits commodities. And you can see right now they're talking about, well, commodities are 4-year highs. No, they're
Yeah.
not. The rate of change in commodity prices has been dramatic over the last year. So a huge percent rate of change. But in terms of historical prices, you can see we're about in the middle of the last 20-year range. So if
Right.
commodities have more to run, they certainly do. Uh, but anyway, that correlation is not a good correlation, and people need to be aware of that.
So, Michael, now moving on to your next chart, how important is the weekly spread on silver versus gold? And like, when will it break out, do you believe?
Well, we've observed over much time
Hmm.
that in sharp uptrends in gold and silver, silver leads. And when gold and silver are correcting or they're in bear trends, either way, silver will lead on the downside, meaning silver is either an outperformer or it's an underperformer.
Hmm.
What we see here is the top chart shows the black line is the weekly closing price of silver expressed as a percent of the price of gold. So if you go to the extreme left over there, that's in the summer of 2019. Silver was about 1.15% the price of gold. Okay. It
Okay.
went up to about 1.2%. And then we had that collapse into March of 2020. So not only did the price of silver and gold have a quick drop then,
Hmm.
it was a matter of weeks, silver dropped a lot more than gold. But then look what happened. That low you see there is in March, and then it popped up. But look what happened you're talking May still.
Yeah.
You were surging in May. Now, remember that silver didn't explode in price, nor gold, until late June, July of 2020. But this spread had already turned and was exploding, saying, I'm now going to outperform gold again.
Right.
Well, again, that is a good signal that both of the metals are likely to go up. because silver leads in the upside and it leads in the downside. Now look at the chart below it. This is what we do that's different. We measure the spread chart versus momentum of the spread, meaning in this case against its 10-week moving average.
Okay.
What we're plotting here is the weekly closes of that spread at the top compared to where in relationship to the 10-week averages, above it or below it. You can see there's a red downtrend line back in 2019 to 20. You broke out over that in early May.
Right.
So again, you're talking a month or two warning. Momentum says that spread's turning up, and boy, not only did the spread turn up, but silver and gold net price exploded shortly thereafter. Now look what happened up there, and you made a peak on the spread in the summer of 2020, and on the momentum you made a peak.
Right.
Scroll up a little bit to show the spread a bit. Now you'll see that the spread went on higher until January of 2021, the top chart. Actually, higher high. Well, if you recall, silver went back to its highs then. In fact, it made
that's right.
Marginally higher price high in January 2021 than it did in the summer of 20. Gold did not. But the momentum of the spread below was not making the new high. The spread made a new high, but that momentum back then,
right,
about in the early 2021 period, was making a lesser high. So it didn't confirm what the spread was saying. So momentum warned you, this could be running out of gas. Sure enough, it did. Okay, now what's happened since early 2021 on the spread? It's gone down in staircase manner about 2/3 of the way back to the March 2020 low. You can see on the top chart, it's just been a downward process, not a collapse, but just a constant.
Yeah, a painful process.
Well, what's happened during that time? Gold and silver both have congested and pulled back. Silver's done more of a pullback, obviously, than gold has. Gold remains within the range that it established in 2020 and 2021. There was a low in March 2021 on gold that took it down to 1670.
Mm-hmm.
On our price of gold, we've never been able to go below that low. We tried to a third time a month ago. We got down to 1674 and they bought it up again.
Yeah.
But meanwhile, the spread continues to deteriorate. But look at the momentum chart. It gives you an early warning. Two things have recently happened. This chart is 1 week old, by the way, in terms of the data.
Mm-hmm.
Broke out over the black downtrend line. Okay, that's a hint. But we prefer it to take out the prior three highs that define that red cap up there, that red horizontal line. Go back a year and a half and you'll see there's three highs that bump that line. It's a triple top. If you go through it, it's a quadruple top breakout. We're a hair's breadth from taking that out.
What price is that, Michael? Sorry to cut you off.
Look at the spread chart. You'll see the little circle above on the spread chart, the top chart.
Mm-hmm.
It takes about 1.8%. Silver's trading a week ago about 1.5 something percent. If you go up to 1.8%, in other words, if you divide the price of silver into gold,
mm-hmm.
it comes out to 1.8% of the price of gold, then that momentum chart below will be blowing through that ceiling, that red line ceiling that we've noted there. At that point, we have a major breakout in the spread over a line that defines the past year and a half of action. And it indicates that the entire process of decay seen in the spread of silver versus gold is flipping the other way. Well, if silver's going to shift to outperform, you can bet that both metals are going up.
Right.
With silver in the lead for a change. So we think this indicator here is a very important one to watch over the next coming weeks.